Good day. This is the Elliott Wave weekly update for platinum, gold, and silver, being recorded on Saturday, October the 19th, 2024. In platinum, I'm going to start with the maximum monthly chart that I have. And the data that I have begins in 2003 up into the current 2024. So I look at about 21 years of data. And I have gone back and I've also gone to other sources that have a much larger chart in terms of time and to work out exactly how I want to start and where I want to put things within my monthly chart that I have via Thinkorswim. So what I have is that I have a primary fifth wave completing in March of 2008. And then, of course, we had the great financial collapse, but we worked our way through an ABC, which I am considering primary wave A of a larger corrective ABC of primary degree. So if I had to go one more up, I'd go up to a cycle degree to what this is. But if I hold it to a primary degree, then I have to consider that after 5, you get an ABC, also primary degree. So this would be wave A, primary wave A of this larger correction after this multi-year rally. Now, primary wave A leads us to primary wave B. Now, again, I want to talk about the time factor here. If we have 2008 as for the completion of that top, or the primary fifth wave, and we're looking at the initial decline going from 2008 to 2020. So in essence, that is March. This is March. So it's 12 years. So primary A took 12 years to unfold. So now if we're looking at primary wave B, we're basically looking at it coming in between 6 and 9 years to complete. Now we can say that we've got waves A and B, right? So within primary wave B, you have an intermediate A and an intermediate B and an intermediate C. That's what's going to be composed. That's going to be comprising that primary B wave. So within that, again, wave A complete, wave B complete, and wave B was a diagonal triangle, or just not a diagonal, it was a triangle pattern, excuse me. So we have A, B, C, D, E. The wave A took a year, approximately, took a year. And then wave B from 2021 to 2024 took 3 years. So we still have the C wave, which is going to be powerful, should be, and can ultimately bring us back up to the most common retracement levels for a B wave. It doesn't make any difference on direction. In this case, it's a B wave up, are between 50 and 62%. That would be the retracement levels. And so here we have 1435 is 50%. So wave B, primary wave B, would be 50%. If it reached here and stopped, that's a 50% retracement of primary wave A. 62 would be 1641.42. Now we have other suggestions here, and that would be they truly are just Fibonacci levels. I'm not and cannot suggest that that's where the market is going to go, or that's where the market has to go, because everything is going to be based on the pattern, the wave pattern. But as if I'm just doing calculations from the A to the B to put in the C wave, the most common then again retracement for wave C is going to be that wave C is equal to wave A. That takes us to 1698. But what's going to become more important than that fib level is going to be the actual structure. Because what's in a wave C? 5 waves. So all of these will get refined as the move progresses. So I'm not going to bring it down out of there. Let's bring it down to the 3-year weekly chart. Now we're going to dive inside of this particular the triangle pattern and how it ended. That was wave E, completing wave B. Now we're off and starting in intermediate degree C wave. It will be comprised of 5 waves of minor degree. The color code that I use, again, let me just take it back to that monthly chart for a moment so we can see. Primary degree, I label them in green. So we have the labels here, green, and that's the fib retracements for the B wave, which will also be a green because it's primary, and they are associated with here. Then on anything in the intermediate degree, so I'm looking for an intermediate C wave to complete primary B, those are in yellow. So we can see that the intermediate degrees labeled in yellow, the fibs are labeled in yellow. So as we bring it down, anything additional, and I'm going to come back down to that 3-year chart, I am now working on a minute degree to as we fill in for this initial minor wave 1, right? Because I'm considering what's inside of an intermediate B wave, or what's inside of this, not the B wave, the C wave. Are going to be 5 waves. Now, since the degree is intermediate, the internal count will be minor. So to start, we're looking for 5 waves of minor degree, to be labeled 1, 2, 3, 4, 5. Those will be this color, that orange gold color. So we're still within the starting phase of minor wave 1. And so what's inside that minor wave 1 are 5 waves of minute degree. Those are labeled in this white. And here we have also the fib levels that go along with, in this case, I'll dive deeper, but it goes along with a minute wave 2. So we've labeled this first 5 up as minute wave 1. So let's dive down, go down to the daily chart, and you can see we have 1, 2, 3, 4, 5, minute 1. Now, what I find interesting is that we have ABC down, and that could be minute wave 2, and I've labeled as such. And it actually reached where minute 2 came down to reach 100% of the C wave, came down to reach 100% of the C wave. So in other words, it was ABC down. C equaled A at 9:53. So that all kind of fits in. Now, what are we possibly looking at here? If this did not complete, but only ABC down A, ABC up B, then we're looking for a return trip back down, right? So in other words, within the minute wave 2, we have an ABC. And those are going to be within the minuet degree. So we continue to move down in degree, and that covers our smaller time frames as we move down from the monthly to the weekly, to the daily, and then I can move again to the 4-hour, which I'm going to do now. So now we can go inside, and now our concern is just right in here. We're just looking at what this move is doing here. So here are our possibilities. So I'm marking this as possibly could be complete, but the other possibility that is just minuet wave A of the minute wave 2, in which case this comes all the way back up, pretty much almost a flat, right? So we have an ABC down 3, 3 up, almost a flat. And that could be labeled as wave B. Now, the alternate, and I've got that up in the parentheses here, is that it's a minuet wave 1. And that would then suggest, that's the alternate, the A stands for alternate. That would suggest that that 2 did finish here, and this is minuet wave 1, and we're going to come off in a wave 2. So I'm giving you both sides. These are also possibilities. That I pretty much can move over to here. In fact, I will. And I'm going to activate that. I'm going to bring it back, and I'm going to set it right there. Because I do actually, the strength is I do believe that it likely is finishing minute wave 2. And what we've done is likely 1, 2, 3, 4, 5, 1, 2, 1, 2. There's 3. It gets very choppy in here. That's why I brought up this alternate view. And what the alternate view suggests, right? So that's alternate is at its 1. Otherwise, I'm counting it as an A and a B, and we still have a C wave down. Pretty much comes, you can see that it's pretty much flat. So A, B, C, we come back down to 953, maybe as low as 946, because we didn't quite break that high. Now, if we went above 1,030, actually 1,031, then the alternate jumps into play. That remains, these come off, and we'd be looking for this to continue to rise. Now, having said that, I just need a little bit more. I don't need a whole lot more to finish this minuet wave 1. So I'm not looking for the rally. I mean, the rally could, of course, gain strength. I can't say it won't, but I'd be looking for it to rise, but then also to come back down. And when I compare platinum to the other precious metals that I cover within this update, which are gold and silver, they're all blasting to the moon right now. And there are plenty of reasons underneath all of that. And particularly for platinum, it's entering into its seasonal time when the market will rally due to platinum users, right? So we have commercial users, people the companies that are taking platinum and using it in their products. And quite frankly, the automotive industry is number 1. And so all the EV producers, that produce those cars, use platinum in the production. And there are other companies that also, within the production of their products, use platinum. And so, and also just out there so that you understand this, there's been a little bit of demand. And so it's been reported that the Central Bank of China is actually buying platinum and storing it. Now, I'm sure that part of that is, they have an expanding EV market. And so a lot of it could be for that. But I also believe that they're using it as a precious metal. And they are just keeping it, because they believe it's going to go up. And therefore, they could be backing something with it. As we know that China is now involved quite heavily in the march to displace the dollar as the reserve currency for trade. And so I think that if they're looking to replace it by the yuan, the digital yuan, by the way, then they have to back that with something. Right now, we know that China is a continuing buyer of gold. And so they have been storing lots of gold. And I think that's in advance of actually trying to dislodge the dollar being the reserve currency for international trade. Now, so I believe that they're adding platinum to that as well. At least that's what I'm hearing. Now, back to the platinum chart. So we should find out pretty quickly. I'm on a 4-hour chart. We should not take that long before we see whether platinum is going to pull back from here, or do we go up a little bit more? And then it reverts, the A and the B, those go out the window. And so we then go back to that the 2 is in place, clean ABC down, by the way, that it's in place, and that the minute wave 1 would also be complete. And that would be, the minuet wave 1 would also be complete in terms of we're inside of a minute third wave. Now, we would need that additional wave 2 to come down. And that's where these fibs are coming into play here. So again, within this one, I can also add the 50%. And these I don't want, so I'm going to take those off. I had them there for a reason. Now I somehow can't remember. So here we have, if indeed minuet wave 1 completes We finish it up, it completes, and then we start to come down in a wave 2. Your first, and that's based on Friday's closing high. If it moves up and gets above 1,031, then I'll shift this up and there'll be slight changes to these levels. But right now, if it just starts to correct from here, then I'd be looking for 50 to 62% on a pullback in a wave 2. And there are our levels, 990, 981. Also, on the 4-hour chart, we have the 4-hour 200 period moving average at 989. Puts a little bit more emphasis on that 990 level being able to contain anything pulling back, and also what would we be looking for if it is a minuet wave 2 coming down. It should be an ABC. So we got that we're working on. Then right below that is another level I have found that actually platinum does more often, and that is 0.732 or 731. And so that fib level has shown up in several different places. And here, if this is 1 and we're not done with the 2 yet, so minute wave 1, minute wave 2, if this is an A, B, and we come down in a C wave, well, I'd be looking for here, but you can see it didn't quite take out that high. So if we start to correct from here, and I put the B there, then that C wave should bring us back to 953 to 946, and that's 0.713. 0.7, here it's a little bit different, so it's 731. And I could move that, and it's going to push that up a little bit higher. In fact, I will just kind of switch that around. 0713. That's not going to work. Got to put the period in there. 7.713. And let's see what it is. Goes up slightly. So we have a little bit of change. I wanted to keep it consistent. I reverse those numbers. We're 50%, 62%, 70.3% retracement. And that could be a wave 2, but the C wave, now if it turns into a C wave, yes, I think we'd find some support there, but it would be expected to go back down to that low at 953, which is 100%, and maybe a little bit extra because it didn't quite take that out. And that is the overall of this move, brings us back to 946. So let's take it down to the hourly and see if we have many more hints. You can see there's a couple of ways I could look. This could be A, B, C, or 1, 2, and this all ends up being 3. So I've actually been a little bit creative here because I do think that this is a strange pattern because we have 5 up, then we have 3 down, 3 up, 5 down. So this is actually A, B, C. But that B wave goes way above in terms of, just the price and then the chart. But it does 5 down. And so 5 down as a standalone, if we just went here, is never telling you that's complete. But if I go from here, A, B, 1, 2, 3, 4, 5, C. So what could I have possibly here? A 1, 2, an A, B, and then this also very strange pattern and how it pulled out, which is why I'm considering both, that maybe it is the minuet wave 1, but I'm kind of also including what if it was minuet wave A of 2, minuet wave B of 2, and we come back down in a C wave, which does have the potential then to bring us all the way back to here. So a lot to be looking for here. On an Elliott basis, these are difficult. These are difficult patterns to interpret. But if I just take what is comprised in an ABC, There's the A, there's the B, and the C, and it almost could be a flat, but it just gets weird because of this gigantic rally, and then another drop all the way back down. So markets are the market, and my task is to try to figure out what it all means being put together. And that's the best that I'm doing right now, is that, yes, on a longer term basis, I think that platinum is in a stronger rally higher. I believe that the primary or the intermediate B wave is complete at that low right there. And that puts us in an intermediate C wave, and we're in the beginning stages of that intermediate wave C. And it will comprise of 5 waves up minor degree, of which we're in within that first minor wave higher, minor wave 1 higher. So just to recap where I think we stand within it, I think that we've got to go through, figure out the one I'm fairly satisfied with, minuet. If anything, I could bump it to a minor degree, and then we'd be looking at minor wave 2, and then these would be minute degree. But I'm leaving it as minute because I think that the potential for the rally, when we look at our longer term wave pattern, we have potential to get all the way up into here over the next few years. It's not going to happen quickly. So please don't misunderstand and run out and buy platinum thinking, okay, it's going to 1400. And then when it doesn't, blame Elliott. And it's not. This is over time. That's why I constantly start from the large and I come down to the next time frame down. And that's where we are. So lots of trading to do, lots of build up to both directions. Okay, so let's now take a look at gold. I have been, and again, I'm going to go all the way out just because I need to, because where we are, let's update this larger picture. In the larger picture, I have gold moving higher, right? And this would be off of the 1999 lows at 254. That the market that completed at that level a cycle degree, wave 2. Now, I don't go above a cycle degree in gold, so I don't think that gold now goes to a super cycle degree. In fact, some may argue that it really can't go to a cycle degree, but I believe that we can. There's enough data available in gold where you can comprise that large of a chart. So I think that here, this initial high that we had in December of 1970, January of 1980 was cycle wave 1. And that protracted move, which took 9 years, right? 19 years, excuse me, was cycle wave 2. And it was an ABC, and it was a very long walk down to that low, and lots of things involved within it. So from there, we're now looking for 5 waves up of primary degree. That'll be consistent within that cycle 3rd wave. So I have gone and I've had to, more than once, reassess the degree of what this move can do. Now, and so a while back, I had talked about, okay, we're in a primary 3rd wave higher, and then showing how that all starts to develop. And you can now see that basically from April of 2023, but we can go from this low, which was in October of 2023. The market has just been explosive to the upside, and continues with, I think, with Friday, this past Friday, the market again moving to new all-time highs, never seen. We are in uncharted waters, so to speak, here, uncharted territory. So what really the marketplace starts to rely on are Fibonacci levels to how high can gold go to? we don't have anything that we can plug in and say, well, it got to that level in 2021, 2011. It got to this level in 1980. But what we can do is we can connect and form a trend line and see that on this monthly chart, that trend line was broken at 2,400, even below. So monthly, one, primary two, we're in a primary wave three. It's going to consist of 5 waves of intermediate degree. Let's start moving down. Let's go to that weekly chart on a 5-year basis. So now we're inside of this primary third. It's going to consist of 5 waves of intermediate degree. There's intermediate wave 1, which was 2020, intermediate wave 2, which is 2022, and now we're inside intermediate wave 3, which will consist of 5 waves of minor degree, of which we basically only finished 1 and 2. Then we start to go up in a minor third wave, and it has subdivided numerous times. So where are we within that? Again, this is a 5-year weekly chart. So we have, starting at that low from 2023, October of 2023, we start to subdivide. Minute 1. So what's going to be inside? Let me just retrace. What's going to be inside minor wave 3? 5 waves of minute degree. You're going to hear me repeat this as we move through all of these products, because that's the pattern. That's how we build this picture. So minor degree, it's 5 waves of minute degree for the first wave, 3 waves of minute degree for wave 2, 5 waves of minute degree for wave 3. Wave 3 is often within Elliott considered the longest and the strongest wave. It also applies even within this count, but one better, that most often in gold is where it's found more often, but I kind of stretch it a little bit and say within the precious metals, that it's the fifth wave that becomes the one that just leaps and thrusts in the direction. In this case, the direction is up. So if we're only within intermediate wave 3, we still have intermediate wave 5 to come. But let's just bear in mind, 1, 2, now we're inside this. Minute 1, 2, and we're inside this. Minuet wave 1, 2, 3, 4. So we're in minuet wave 5, and just check that out. So again, minuet level, not super big, but this minuet wave 5 began in June of this year off of the 2304 low. And now we reached 2736 on Friday. So 700 points for this small minuet fifth wave, and it's not over yet. So we can come down and we're within, again, remember, I'm on the weekly chart. So we're inside minuet wave 5. And we have sub-minuet 1, 2, 3, and 4. We're in the sub-minuet wave 5. I'm going to continue to bring this down. Let's bring it down to the daily chart. And again, just so that we're all on the same page, here, minute 3. And this would be minuet 5, minuet wave 5. And so what I'm looking to complete is that minute third wave. And that's why I stuck it up here. Why? Well, because we still have more to go here. If I'm looking for the fifth, and now we're coming up, it has potential. It can go all the way up to here. If I start to break this down, then let me come off the daily. Well, let's go over it here. So we're in minuet wave 5. Inside of that, we have sub-minuet wave 1, 2, 3, and 4, and they subdivided several times. I know that pattern. If anything, what I have is I can move the 1 there, and once again, I get a strange wave 2. I get this A, B, C, wave 2. And so I can put the 1 down there, and this could be a 2, and then we're into the third, which I find is complete. The 4 is complete, A, B, C. That's the daily. Now, bringing it down to the 4-hour chart because I want to get inside here. And this is on the 4-hour chart. Let me do this, bring it down, and then bring it up so we can see what we're looking at inside here. So we have 1, 2, and now this is this beautiful third, which I think could be complete. Maybe we might, because it ended, it finished Friday on the highs. So it's a very strange because it's like partially we had an expiration in GLD and maybe some of that flow over will push us up a little bit higher, but I think we're now due for a pullback. And in this case, I'd be looking for it to be a sub minuet wave 4 pullback. Now we're very granular here, but that's, the moves are big, but in terms of the overall move, we're putting it down on a level where these are sub waves of this much larger move in progress. So within this, again, 1, 2, A, B, C. It did put in a new high. I'm seeing that a lot in the precious metals right now, where we get these irregular within these corrective patterns. And when I say irregular, it's the B wave. It's the B wave of this very small wave 2, and it put in a new high above the wave 1, then came down and still put in a low below the A wave. So that all fits and it works. So from there, we kind of can go 1, 2, 1, 2, 3, and then we have the 4. 1, 2, 3, 4, 5. 1, 2, 1, 2, 3, 4, 5, 3, 4. And then see through, I think we might have a 3 here of this level. Maybe. I didn't put anything there because I don't want to consider, I have to consider, well, we might have a little bit of throw over still. Pushing. What's our next level of resistance? 2753 on the sub-minuet level for 5. But I'm thinking there, we might just be finishing this 5. And then that 5 will complete this 5. I didn't put it on top because I want to stack them. And actually, if we go back out and just pull this over and then pull this up. So what we're looking here is that's the 5. And then we have to go all the way back. Let me just reframe this. So here we have, and then the 1, 2, 3, 4, 5 to finish the minuet. Now the minuet projects to here because it exceeded 1.618, and the next logical is 2.618. So therefore, that would be where, but what takes precedence over that fib level, once we exceed the normal levels for the move itself, we go to that next level, but I add that what takes precedence is the structure itself. And so here we are inside this sub-minuet 5-wave move to put in the minuet wave 5. And so that could all happen very quickly. Because within here, we're looking for this sub-minuet wave 5. That will then complete minuet wave 5. And also, I can go back up far enough to realize where we might be looking to complete. Once we get minuet wave 5, it's going to complete minute wave 3. Those project all the way out to here. Why? Look at that number, 4.618. So that 3.618, 3.882 have all been exceeded. So we go to the next one. But again, what takes precedence here, for me at least, is the actual structure. And so I'm able to count 1, 2, 3, 4. We're inside the 5th. I got 1, 2, 3, 4. We're inside the 5th. And I have 1, 2, possibly 3 and 4. And we're going to be inside that last 5th. And now we get to these projections. I lift this as top side here because, to tell you the truth, I don't know if there'll be one more explosive push on Monday, we certainly have plenty going on that would support gold in terms of geopolitical situations, in terms of just internal situations within our country and other countries. So, yes, we could have one more big push up, might get a little tiny pullback, and then a push up to finish the fifth, the fifth, the fifth, and the third. So in that case, you see where that comes in. If this fifth wave goes 100% of that first wave, then we're looking at 2836. So let's just review what we have left in terms of fib resistance. Now, this would be for this wave 5. We have 2753. This would be for this wave 5. We have 2784. But if that gets blown through, well, then we're back to this fifth wave, which is 2836. Once I have a small 4, if and when I get it, I can add one more on this degree, and that'll probably blend in with all of this. But I cannot rule out a full-blown push, right? Because remember what I've also been talking about, that when the market starts getting into uncharted territory, uncharted water, whatever you want to call it, that again, we don't have anything to anchor to say that is resistance. It should stop it. It should hold it. It should do this, because we've never been here before. So who am I to say that, well, 2,800 should really cap this all off? That's how am I going to value gold in a, some type of catastrophic situation, some type of truly a situation that may tip the markets, tip the equity markets, tip the dollar market, tip the treasury markets. It could really start to bring turmoil into our other markets. And on a global scale, the world will turn to gold as it has always been a storehouse of value. So in other words, gold will hold its value regardless of what happens to the dollar. So if the dollar were to just tank, gold would still hold its value. And there are ways you can look at that and you can figure that out. And I'm not going to go into it right now. But it's just like, what does, how can we equate what buys, a tank of gas, what buys a suit of clothes, what buys, groceries, what buys these things? And if the dollar goes to naught, the gold, of course, based in dollars, will also decrease, but it remains a storehouse of value. So with that in mind, when there's turmoil that can really affect the economies of the world, money flows into gold. Just to store it there, to keep it there, because if everything just goes bust, people have the gold and they can do what they need to do. That's the theory. All right, but we're going to be looking at the pattern, the structure of all of this. So my point in all of this is that we're very close, to finishing the minuet third wave. And what a glorious minuet third wave it has been. The power of third waves is on full display in gold. Now, I can bring this down. Let's take a look at it on the hourly chart. And you can see just the power of this rally. And it is also not the best looking chart. It's like up, we go up, we slam down, we rise up, we slam down, we rise up. Normal pullback. And now you can kind of see we're wedging. This is a diagonal fifth. And that can be very commonly found in a finishing move for a larger pattern. Right now, we're looking for this sub minuet wave 3. Well, if we had to go inside, 1, 2, 3, 4, 5, there's 1, there's 2. And then this gets ugly, but I could be finishing wave 3. Get a little 4, come back, put in that 5, put in the 5, put in the 5, put in the 3. And there's all of our levels. you can see. So coming all the way down, there's still plenty of room. Let's just go over bib resistance levels. 2753. As the market moves through particular moves, I'll be able to add to fill in some of these areas here to here to here and here. So, but right now, 2753.30, 2784, then we break. And you realize that when we break 2800, there's not much there. Why? We've never been here before. So we have 2836 to 2843. So you could say 2835 to 2850. Use your bigger numbers, all right? So that fills in there. Now, if we break there, we're headed towards 2900, and we have resistance just below it. Above it, you can see again, we break 29, there's nothing. There's nothing until we get way up here to 2900. Is the market capable of tacking on 200 more points within this very small detailed count to produce a little bit larger move? My answer is yes. Again, there are geopolitical situations going on in our world right now that could really ignite a mad dash for gold. That's the best way I can put it. And being that we don't have levels, it's going to get thinner up here. In other words, why would somebody want to short gold? If you have it to sell, why would you want to sell it? So it's going to come down to dealers. It's going to come down to trades that are happening someplace else, and this is a hedge. So in other words, you're selling it or you're buying it to hedge a trade. That may be taking place in GLD, but GLD has its own ETF, right? That is an ETF. So it has its price. But that then has to turn around and actually buy or sell in the physical gold market. So there's a lot of things that can go on. And yes, if this really gets going, it could just fly. If there's a reason and a panic, it could fly higher. I'm not saying that's what's going to happen. I'm just saying when people go, oh God, what's going to produce this? Think about it. All right, so gold continues to have strong upside potentials. Now I'm moving it back out to the daily, and I'm talking here. There's our first primary degree. And what really am I looking at primary degree? We got all the way. 1.618 would be my first one. 1.382 worked, 1.236. Those I leave in because they're usable. But where do I think? Well, I have 1.618, 2.618, 3.618, 1.618. As that's a minor, excuse me, that is the primary, intermediate, minor. 35 to 37.50. Could gold get there? Yeah, it could. A multitude of reasons, but I'm not going to say, oh, never. That's so high. No. Look at all of them when we put them together. And these are all just the different degrees in motion right now. From the minuet to the minute, to the minor, to the intermediate, to the primary. And we still have much higher minute. But boy, that would be something. But I'm just talking about massive blow-off rally. And I don't think it's going to come necessarily in this position, but I'm just including it. Okay, that's gold. Continues to have very strong, best I can do. Let me see what yeah, very strong upside potential. At least 3,000. Very strong upside potential right now to get to 3,000. And then do a stronger pullback. Now, the other thing with precious metals, and particularly with gold, they reach a point and then suddenly you see these really strong pullbacks. And what it really comes to is like the late people that come into the party that are paying high prices for whatever the reason is. We get a massive turnaround and they sell. They have to. They can't take the loss. So again, it's very typical for gold to reach a level and then suddenly just drop 100, 200. And because we're all the way up here, we will be able to find support at previous all-time high levels, but it could go through them. But once again, when it's time, I'll be able to throw some fibs out there so we can have some idea. And then actually we'll also be looking at possible reasons why gold is reversing. All right, now let's go over and look at silver, which again, wow. Silver on Friday was pretty incredible. Let's go over and take a look at this maximum weekly chart. So again, I have silver in a much different type of a pattern, one that Elliott Wave uses called WXY. And normally what would follow a WXY is a Z. And in this case, that Z wave would be to the downside. Now, this is a multi-year monthly chart, and this one goes back to 1970. So we have the 1980 all-time high with the Hunt brothers, right? If you were alive and well at that period, this is the Hunt brothers trying to corner the market in silver. And, and it ran up to 29. Actually, this one was 1979. There we have 1980, $50. It reached $50 and then crashed. I mean, crashed because they got cornered. They were like, okay, manipulating the market. And it was the Hunt brothers, and they had to go out of business. So there we have the A, B, C, huge. Because here we got back up, not quite hitting that $50 mark. We got up to 49.82. Might as well call it flat, right? Sure. And that was a W. And you can see there's the upswing down there. It looks like a big W. So there's the W. Cycle degree. ABC. Massive downswing off of that 49.82 high. ABC down, that low was $11.64. 2020. This high was 2011. This low, 2020, 9 years. Now, peak to peak, 2011 to 1980, 31 years. So a lot different. So from here, 2011 to 2020, 9 years. So if we're in this gigantic now, so the X wave took 9 years. Now we're back in an upswing, and I'm looking for an ABC, but it's going to form a Y wave. And so what just think of a Y. This one's a little bit upside down, right? There's the cup. There puts in the Y, puts in the long Y, but it's in reverse. So you could say reverse Y pattern, but it's still a Y pattern. That's going to look like a big Y, but it's upside down. All right, so all these numbers, possible in a Y. A Y wave, particularly within the C portion of it, sure, it can go up and equal, come close, or break. So we might see a new all-time high in silver. And the more important thing to is like start to bring this down, and we'll take a look. Let's look at the weekly 5-year. So 5 years on a weekly basis. Here's the A, here's the B. I need to probably move that A over. But this is AB, so I should actually, sorry, but this, I need to move and put it over here. It's a little bit different. That was just a slight irregular B and coming down to here. All right, so moving that, correcting that move. So now we have a C wave. This is where it starts, silver gets a little bit weird because you'll notice that a lot of threes. Now I'm on a 5-year weekly chart. 3, 3, again, slight irregular, but we're seeing it more, and I'm seeing it more in the metals, and now we're doing a third, right? So we have what's inside this primary C wave, 5 waves of intermediate degree. And if it's forming a triangle pattern, right? So a diagonal C wave, not uncommon. And maybe that's what's developing, because I'm seeing a lot of threes, and to where if I'm going to try to count it as 5, I got a lot of overlap. So I went back and said, okay, this is 1 and this is 2, and it's right as a part of a primary diagonal C wave. Well, then we're in the ABC, we're inside the C wave up for intermediate wave 3. So what's inside this intermediate wave 1? It's going to be a minor degree ABC. What's inside the intermediate wave 2? A minor degree ABC. What's inside the 3? A minor degree ABC. There's the A, here's the B. Now let's bring it down out of the rafters. Look at this on the daily. There's the A and B of 3. We're in wave C, minor wave C up. All C's must be 5. Even if it's going to form its own diagonal. In this case, it's not necessarily, but don't know yet. But catch this. That was a daily move. That was Friday. Tremendous rally in silver. And to me, it's like, okay, finally, silver's playing catch up to the other metals. Something lit it. Something freed it up. You know, being held down, just blew right through everything. Could have been an expiration. I don't know. But in any case, 1, 2, 1, 2. We're inside a minuet third. And we even within it, 1, 2. So 1, 2, 1, 2. I mean, it just keeps subdividing. Well, what does that tell me? We're likely going to end up here to finish this third, to finish this third. So all of these are real. This is real potential for silver right now. Now, can I guarantee it? There aren't any in the market, so no. But we just saw a lift. And after being held down for so long against rising gold prices, it's just, that could be just the start of all the pent up coil, so to speak. The wound up coil, wound up spring gets released, and you get bam, because it was to the upside. You can also see it to the downside. Now, cautious, I'm adding here a cautious tone, because precious metals, particularly gold and silver, are infamous for rising up and then suddenly just selling off. Now, I think there's more to come before it would sell off. If it were to sell off here, I would be, if it took back the $3 or $4 and brought it back to 30, I would be surprised. I can't say it won't happen, but I would be surprised. I think we're going to continue to have upside. Bring it out of the daily. Let me bring it down to here. Now we're down inside this whole thing. 1, 2, we're looking at this third. This pertains to the minute degree. I leave it there because it should provide resistance. I'm not saying it's going to stop at that level. Now, if we're counting from here, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5, 3, 4, 5. Gets us up from there, right? 1, 2, 1, 2. So 3, 4, 5 of this 3. And then we get a 4, 5 of this 3 and 4, 5 of this 3. So we can go, we can truly go. I'm not filling this in just yet, but I could say 1, 2, and yeah, I can put it there. we can start to just add fibs to fill in any gaps that we might have. And I'm going to go there. Actually, they're the same. I'm going to go there, and you can see I've got to go in, and I'm going to take all of that off, and even that. So what we have left is 2.618. I can go there, and 3.618, and that's going to be in this sub-minuet degree. That's what we have left. So, right, I'm going there. That's what is in there. And I can go one more and go from here to here and to here. And now I'm adding one additional degree. Boy, you can see the potential. So that one, that one, that one, and that one again, they're all been surpassed. So what do we have left? That one and this color would be here. So now we're really getting down to the nitty-gritty inside this wave. And now what is its potential? So if I'm going 1, 2, 1, 2, 1, 2, this third projects to here. This third projects to here and then here. So what can we say about silver? What can we potentially say? This is for the minute. Minute would be finishing after we get to this 3, do a 4 and a 5. For this 3, 37. Look at that. 38. 41. So it really, silver has potential. Again, I'm not in the head of the traders. I'm not in the head of what's happening in the world. But it has the potential to continue to explode higher. Now, if I go back to that coiled spring type of motion, it could move very quickly. And they could again. And this might just be starting where we get a 4-5, 4-5, 4-5. So in each one of those little fifth waves can blast through a lot of this stuff. So in other words, right, 3, 4, 5, 4, 5, 4, 5. Suddenly we're up here, 36, 37. We got up to 33, almost 34 on Friday. If I were to go up another $3, $4, we're already there. Right? Consider what it did on the hourly, where it started and what it did in a day. It's a big move, and it can happen. Everything in the precious metals, they are primed to go higher. So I remain, I'm going to hate this word, but I'm going to use it. I remain bullish on the precious metals. I have been bullish on gold for quite some time. I've been actually bullish on silver. It just gets stuck and doesn't move. And then suddenly when it does, it's almost like something got cleared on Friday. And it could have been due to an expiration in SLV. Don't forget that each one, gold, silver, and I believe platinum, all have ETFs. And therefore, within that ETF, the options trade. And it could have been something, and it could have been something even within silver itself, options on the future. Don't know. But something got released. And if you follow me on my equity updates, it could be just the gamma. The options flow and volatility combining with releasing gamma. And when gamma gets released via an expiration, it can produce a bound, a rise in volatility or a corrective move. In this case, the corrective move ended up being to the upside. So again, I think there's plenty of upside potential in all these markets. Understand that the pullbacks are going to appear to be vicious. In other words, it would not surprise me to see gold drop $50 to $100 real fast. And they're famous for it, by the way. If you've been trading gold for long enough, you know that gold dealers are famous We're kind of like, okay, we got all the retail long, boom, let's push them out. And all they're doing is buying back their short. So again, lots of potential. I'm going to finish it right there and wish everybody a great trading week.